Good morning dear learners and welcome you all to the module number 6 of my course on financial literacy. I, Dr. Vandana Sonkar, Assistant Professor, Faculty of Commerce, Banaras Hindu University, welcome you all to the lecture number 26, that is Investment in Capital Market. So in this module, we will be going to discuss about the securities market, where we will be going to understand the different segments of the security market where an investor can invest their money into. So we will be going to understand the various functions and objectives of the security market, as well as we will also going to delve into the concept of primary and secondary market, capital and money market, and we will be also going to know how an individual investor can invest into the security market and have a great return from their various types of investment. So in the security market, in this lecture, we will be going to basically cover the various concepts of the security market in the overview, as well as we will be also going to understand what are the primary objectives and functions of security market. We will be also going to understand the different types of the security market, that is the capital market and the money market, and we will be also going to discuss how an individual can invest into the security market. The procedure for applying for an IPO as well as the ASBA and UPI mechanism will also be discussed, and investment through secondary market will be covered in this particular lecture. We will be also going to discuss some of the important informations related with the prerequisite of the investing into the security market. So let us discuss the basic concepts related with the secondary market, and then in the later on part of the discussion we will be going to understand how you as an investor can invest into the security market. So basically, if we define the security market, then it is a marketplace or a segment of the financial market where you can exchange the financial instrument, that is the shares, securities, bonds and debentures of the corporate firms for the purpose of investing your money into the financial system of the country. Basically, the security market is a platform where the companies can raise their fund for their financial and business related activities by issuing different kind of financial instrument such as equity share, preference share, debt security and different other kind of financial instrument to the general public. This is a kind of marketplace that works as a link between the savers of the money and the investors of the money. So the basic functions of the security market in the financial system is to provide mobilization of saving from the savers of the money to the investors of the money, and also it takes care of the fact that there should be any link between the individual investor who are having very small amount of money with them, as well as the corporates who need a large pool of fund for the purpose of producing and economic activities of their business organization. So in such circumstances, the security markets takes into care that it should work as a bridge or a link between the savers and the investors of the money. So the basic function in case of the security market is to enable the investor to buy or sell their financial instrument into the market such as shares and bonds. The various types of post issuance process are also completed with the help of the security market, such as after issuing the securities to the public, the company is also required to list their shares or securities into the recognized stock exchange for the purpose of its trading, and hence it makes the liquidity function also possible. That means your fund that you will invest into the security market is highly liquid, as you can resell the already purchased share into the secondary market to someone else and you can take your funds back whenever you are in need. So by listing the shares of the companies into the recognized stock exchange, it makes it possible for makes it capable of selling the share into the secondary market, and it makes your investment more liquid in nature. It also has a very close relationship with the capital market. Security market is basically a sub market of the broader capital market, which deals with raising long term financing of the market. So financials market of our country basically has two different categorization. One is known as the capital market and the second one is known as the money market. Capital market again has two segments. One is known as the new issue market and the second one is known as the secondary market. And under the new issue market we have again the security market, with the help of which the companies can raise long term investment for their companies and their organization for investing into the various type of productive and economic activities. So basically security market is a sub part of the overall capital market of the nation, from where the corporate organization can raise funds for their activities. Now let us see the primary functions that are performed by the security market. If we talk about the primary functions of the security market, so it basically focuses on mobilization and allocation of saving within an economy. That means it helps the individual to invest into the corporates and the economic activities of the nation. So from the small amount of money savers, this particular system makes it possible to channelize their savings into the investment activities by providing their pool of fund to the corporate investors. So the core function is to mobilize and allocate the savings of the individual investor into the economic activities of the nation. After that, it also has a core function of channelizing funds from investors to entities that require capital for the growth and development of their organization. So it works as a channel, it provides a link between the investor and the corporates. Without this particular system, it will not be possible for the individual investor to go and directly contact to the corporates for the purpose of investing their money into their firm. So it bridges the gap between the investor and the corporate entities, and hence its main function is to provide a channel for making the money available to the corporate investors. So investors invest their savings by purchasing the securities from the security market, such as shares or bonds as are issued by the companies and institution, and the fund raised through these investments are used by issuing entities for business expansion, infrastructure, innovation and other type of business activities. So whatever funds the corporate entities are procuring with the help of the security market, they can be used for multiple purposes. For example, expansion of their business activities, modification or infrastructure or renovation or innovation related activity, or for any other kind of productive activities this fund can be used. Now let us understand with the security market what different kind of benefits an individual investor can achieve. So basically they can have various types of returns from the security market, such as financial rewards, so in the form of interest on the securities in which they have invested, such as bonds or debt securities, dividends from the equity share, or capital appreciation, which is the wealth creation procedure. So the rise in the value of the security, that means the earning per share, may also be a reward for the individual investor from the security market, as well as any credit of bonus share from the companies or corporate for the purpose of sharing the profit with the investors may also be a reward for the investor. So these different benefits may be there for an investors from the security market. Now the next thing that we'll be going to discuss is the different segments of the financial market. So the financial market, as we have already discussed, has basically two segments. One is known as the primary market and the secondary market. So the overall financial market or security market of the country has been divided into two parts depending on the basis of their functions that they perform. So in the primary market, the basic functions or the objective of the market is to raise fund for the organization. So at first time or the initial stages, whenever a company aims at procuring funds for their incorporation and their start of economic activity, they take the help of primary market. It includes issuance of new securities through IPO, that is the initial public offerings, and after that there is secondary market that helps in the trading of the securities that has been already issued with the help of the primary market. So this basically has the objective of capital appreciation. That means the value of the share must be increasing, the earning per share for the investors must be increasing. That will help them to encourage them into the investment activities more and more, and to channelize their savings from the individual investor to the corporate. It also includes the further trading of the securities that has been already offered to the public through the new issue market. So basically security market has two different segments which are interdependent and inseparable from each other, and those are the primary and the secondary market. So we'll be going to understand both these concepts in this particular module, that is the primary market and the secondary market. Now let us first understand the first segment, which is the primary market, and in this lecture we will be going to also understand in what different ways the primary market helps the corporate to procure financial resources for their organization, as well as we will be also going to understand how it benefits to the individual investor. So basically the primary market is a market which is also known as the new issue market, where any company, any corporate firm can raise capital for their company by issuing new securities to the general public. So the securities, the financial instrument, may be in the form of shares, debentures, bonds, or any other kind of financial instrument. So there are majorly two different types of issuer of security. One is known as the corporate entities. Corporate entities are the companies or the entities which mainly issues equity instrument to the general public, such as shares and debt instrument, whereas there may be government entities also. So government entities may include central as well as state entities which issues debt securities such as dated securities and treasury bill to the investor. So these are the different types of entities into the primary market. Now let us have a look on the different type of issues that are made in the primary market. So if we talk about the different type of issues that are made in the primary market, then the first one is the public issue of the security. Then the second one is the preferential issues that are made to the general public, then right issue and bonus issue of the share. So these are the different types of issues that are made to the public in the primary market segment. So public issue is basically a method with the help of which companies can raise financial resources for their organization by offering financial securities such as shares and debentures to the general public through the help of a stock exchange, and any individual investor can subscribe to these shares with the help of the security market. So in the public issue, basically public issue of the equity and other different type of financial instrument can be made. This can be categorized as follows. For example, the first one is the initial public offerings, IPO. IPO is basically a kind of issue where any corporate firm, any organization issues their share for the first time to the general public. So this is the first public offer that is made by the company to the general investor for the purpose of raising the funds for the corporate entities. These funds can be utilized for the purpose of incorporation as well as the management and business operation, expansion, modification and different other type of uses by the corporate entities. In the initial public offering, further we can categorize the issues into multiple categories, such as fresh issues of shares may be there, where new financial instruments are issued by the company to the general public or to the public investors. In this kind of issue, the funds of investors will go to the company to be used for the purpose of issues for which the issue has been made in the security market. That means the company will announce for what purpose they are going to raise the fund from the general public in their prospectus, and for that specific purpose only the fund will be utilized. So economic use of the funds will already be mentioned in the prospectus of the company when there will be any fresh issue for share, and whatever fund will be collected with the help of the subscription, that amount will be used only for that specific purpose only. So this is a method from where any individual can invest into the corporate firms after examining the pros and cons of investing in that particular company, because they are already knowing for what purpose their fund is being procured from them and whether it will be going to give them good returns in the future or not. Now let us understand the another form of issue, which is known as the offer for sale. Offer for sale is a kind of issue where the existing shareholders of the company, they may be a promoter, they may be any financial institution, any underwriter or merchant banker, these different persons may offer their shareholdings to the general public. In this kind of an issue, the funds of the investor will go to such sellers of the share and not to the company. That means the existing shareholders who want to minimize their shareholding in the company, with the help of offer for sale, they can sell their share into the security market and minimize their shareholding in the company. Now the next type of issue under the initial public offering is the follow-on public offer. In the follow-on public offer, it is made by an issuer or company that has already issued any IPOs into the market in past, and it is making a fresh issues of security for the public for raising some additional fund from the market. So these are the various types of issues that has been discussed under the initial public offering. Now the next kind of issue is the preferential issue. In this mode, basically securities are issued to an identified set of investors, such as the promoters of the company, the strategic investors or the employees of company, etc. That simply means here a closed group of the investor are asked to invest into the investment of the company. So preferential issues are issued only for a specific group who may be directly related with the company. So promoters, underwriters, merchant bankers who are associated with the company and their financial interest is vested into the company, they can invest with the help of preferential issue. Next is the right issue. Whenever any company announces any issue for the existing shareholders of the company, the particular right or to subscribe those issues are given to the shareholders in the new issues, then this kind of issues are discussed at the right issue. So in the proportion of their existing shareholding, they are given some preferential right into the subscription of the new issues made by the company. So this is a preferential right for which this kind of issue is known as the right issue. Next one is the bonus issue. When the existing shareholder of the company are issued with some additional units of shareholding, then this kind of issue is known as the bonus issue. So in the proportion of their existing shareholding, without paying a single penny of money, without bearing any additional cost, they are issued some kind of shares from the company to provide them a share of benefits of the company, that is known as the bonus issue. So these are the different type of issues in the security market. Now let us understand how do an individual can invest into the security market. So for the purpose of investing through the primary market into the new securities that are first time offered into the market, such as IPO may be there, in such cases these different steps needs to be followed by the individual investor. The first step is public offer announcement. Any company who wants to launch any IPO into the market, they make a public offer announcement. They provide the information that they want investment from the public with the form of IPO or follow on public offer, that means FPO. So if they want to have any kind of investment from the general investor, they will make a public offer announcement through which the general investor can get an information that these different investment avenues are available in the market where they can invest their money. Now the next procedure is to apply for the same. After getting the information about the IPOs or FPOs available, you need to make an application, and the investor in the process of filling out the application form should provide with the following information to the company or the corporate firm, such as they should provide their name and address, number of shares that in which they want to invest, their bank account detail, as well as their demat account number for the purpose of credit of the allotted share in the FPO or IPO. Next step is for the purpose of subscribing the shares of the company. So payment mechanism must be discussed. Investors can make their payment by using ASBA system, that is application supported by blocked payment, or the amount may be applied in such a case to the investor's bank account, or they can also use the unified payment interface that is used for the quick and secure payment authorization. So application can be submitted of the individual investors by the brokers or the agents or the bank by using the online platforms of payment such as ASBA or UPI that is enabled in the security market platforms in India. Now you need to also take care of the various regulatory compliances to invest into the security market. So the issuing company must comply with all the rules and regulations that are set by the SEBI, RBI, Government of India, and any other act and institution that is governing the security market of our country. So share allotment must be done as per the prescribed guidelines of these different acts and regulation. So SEBI is the main regulatory body, so you must comply with all the regulations that has been laid down by the SEBI. Then share allocation is done. In the share allocation process, when the IPO closes, applications are processed on the basis of information and payment mechanism used by the investors, and then the shares are allotted on the basis of demand and the availability of the number of shares with the company. The blocked funds are debited only in case if the share is allotted to an investor. If no shares are allotted, then the blocked funds are released for them to use it in other investment purposes. After that, credit of shares and listing are done. So allotted shares are credited to the investor's demat account by maintaining a depository participant, and all the securities are allotted to them in an electronic form, which is commonly known as the dematerialized form. The entire process of this credit of share and listing is completed within the 6 working days from the date of the closure of the IPO or FPO, in which the shares allotted are also listed on the recognized stock exchange for their secondary trading. So the shares are then listed into the secondary market, from where you can very easily get the benefit of liquidity also. Now let us understand how you can apply for IPOs, that is the initial public offering, by using the mechanism of ASBA and UPI. So ASBA basically stands for application supported by blocked amount. It is a convenient method with the help of which the investors can block their bank account funds for the purchase of a particular IPO or FPOs, shares and securities. So instead of transferring the money upfront, they can block their amount and they can very easily make the payment of the shares for which they have applied into the security market. So the key features of the ASBA system is the amount equivalent to the IPO application is blocked in your bank account. So in future you will not be going to face any lack of financial resources for the purchase of IPO for which you have applied. The funds always remains in your account, as well as it will continue to earn return also. That means interest on your deposited account will also be credited in your account. So obviously it is an interest bearing account. If the credit of share will be done, successful allotment will be done, then only amount will be debited. In otherwise case, the fund will be released for your use and there will be no need for refund in such a case for the investor. So there will be no need to write or submit a check if you are using the ASBA system. So how you can apply? Investor can very easily apply with the designated branches of ASBA enabled bank, and the list of the bank is available on the official website of SEBI, with the help of which you can very easily apply for the ASBA system for investing into the stock market. The second method for the payment in the security market is UPI. It is a digital payment method that we have already covered into the previous lectures of our course. So in this particular digital payment method, the quick and real-time payment approval is done during the IPO application with the help of the digital payment system. So with the help of mobile apps, with the help of internet banking and various other methods using the unified payment interface, the payment is made possible into the IPO's application. So key features of the unified payment interface, maybe it is a payment method that may be helpful for mainly retail investors. The UPI ID is linked to the bank account and it is entered into the IPO application. Once the IPO application is submitted, the investor receives a collect request in their UPI app, and on the approval of the request, that means when the shares are allotted in your name, then the amount is blocked similarly as there is done in the ASBA system, and debited from your account only if a successful allotment of shares are made into your demat account. So this is the method of UPI system. So these are the different ways or steps with the help of which you can also invest your money into the investment market. Now let us understand how the investment through secondary market can be helpful for you and what are the different steps of investing into the secondary market. A secondary market is a marketplace where an investor can buy and sell the existing securities of the corporates and entities, companies with like shares and bonds, debentures, etc. And these are already listed into the recognized stock exchanges of our country. So as we have discussed in the first section, that is the new issue market, where the IPOs and FPOs are launched, and they are launched for the first time into the market for the subscription from the general investor. In case of secondary market, the already sold share into the new issue market are then listed into the stock exchange for their secondary exchanges. So this makes it easier for the investor to keep their funds liquid. By selling it into the secondary market, they can very easily take back their investment, and they can invest it into the other investment opportunities also. So here, unlike the primary market, transactions between the investor and not directly with the issuing company. So the investors meet here and they sell and purchase the already sold share that has been purchased from the companies into the primary market. The various steps to invest into the secondary market are: you need to first open a demat account. That means a trading and demat account needs to be open. It is similar like a bank account. To begin with investing, you need to have a trading account with a registered stock broker. You cannot directly participate into the security market. You need to have a registered stock broker of a recognized stock exchange of the NSE, BSE or any other stock exchange in which you are investing your money. With the help of that stock broker, the demat account will be managed, and these demat account will be going to help you to manage your shares and securities in an electronic form. So the mode of place, you need to make a placement of order to the stockbroker for the purpose of purchasing a specific quantity of shares and securities into the secondary market. So here we are going to discuss about the modes of placement of order to the stockbroker. So modes of placement of order, we can use a mobile trading app, or we can also order the sale or purchase of securities with the help of our phone. So online trading apps can be used, or physical order can also be made with the broker. So buying or selling of share in the secondary market should only be done through a SEBI registered stock broker or any authorized person. That means they are enabled by the SEBI and stock exchanges to participate into the financial market on behalf of you for the purpose of selling and purchasing the shares and securities on behalf of you. So they always keep a record of the orders placed by you, and they also take care of the different type of rules and regulations that must be followed by the stockbrokers into the secondary market. Now, when you buy or sell any particular amount of share into the secondary market, you need to place an order. So for placing an order, any online trading platform can be used. You can log in into your broker's website through the mobile app or through the phone also, that we had discussed in the previous slide. We can also make a call for the trading facility. We can place the orders over the phone through your broker's call centers also, as well as in person. We can visit to the broker's office and get assistance from the authorized person, that is the broker, for the purpose of placing your orders manually into the secondary market. After that, trade execution takes place. Once the order is matched with the availability of stocks into the stock exchanges, the trade is finally executed and the purchase of share then is credited to your demat account, or if you are selling the share, then it is debited to your demat account. Now let us understand the next part, which is very necessary, that is what must be the prerequisite for the purpose of investing into the security market. What different type of essentialities you need to fulfill to participate your part into the financial system of the country. So in order to be eligible to participate into the financial system of the country, you must have a bank account, as well as you must have a trading account and a demat account. Bank account is needed for the purpose of transferring the fund for purchasing or receiving the money in case if you are selling your shares and securities into the security market. Trading account or broking account is opened for the purpose of making it possible to place your order with the sub broker. So this must be opened with the SEBI registered stock broker of a recognized stock exchange, where you can place orders for buying or selling the shares into the stock exchanges, and it requires procedure of filling out an account opening form from the side of the investor for the purpose of opening the trading account. Now, for the purpose of opening the bank account and trading account, you need to fulfill some KYC requirements. A KYC requirement stands for Know Your Client document. These are some mandate essentialities that are required for the verification of the identity as well as the address of the individual investor to make them eligible to participate into the security market transaction. It must be submitted along with the account opening form to the registered SEBI broker for the purpose of opening your trading account. Now the next essentiality is opening of a dematerialized account. Basically, a demat account is used to hold the financial securities such as shares, bonds, mutual funds, ETFs in an electronic form rather than keeping their physical certificates as a form of evidence. So basically, demat account opening is compulsory for all the investor who wish to trade into the stock market, because offline trading into the security market is not possible nowadays. So these are opened with the help of the depository participant. These depository participant open a demat account for you, and it makes you enable of buying, selling or holding the securities into the stock market. It eliminates the risk of physical damage, theft or loss of certificates of the shares. So you can keep your certificates in a soft copy form very safe with the help of the demat account. Now let us see the various precautions that you must take while filling out the account opening form. Sign must be clear. Whatever signature you are making, that should be clearly done at all the required places, especially where you are giving your preferences for trading in different exchanges. Your signature must be clear. You need to understand the every kind of charge that will be imposed for the purpose of opening and trading with the help of these accounts. So all fee, brokerage charges and other type of charges must be understood and evaluated by the investor before opening the accounts. You need to select the trading segments very wisely. That means in which segments you want to invest your money, whether it is a equity, that is the cash market, future and options market, currency derivative or any other kind of market where you want to invest your money. You need to understand and categorize the preferences of your savings and investment in this particular case. So derivative requires a very good understanding of the hedging and investment opportunities. So that understanding must be with you before investing into the future and option and currency derivative market. Now you need to also authorize the additional facilities. So for facilities like running account and power of attorney, you need to give an explicit written authorization to avoid any kind of future disputes with the stockbroker with the help of whom you are going to invest your money into the market, as well as you also need to provide a valid contact information so that all the trade confirmations can be informed to you, account activity updates can be informed to you, as well as regulatory alerts from the stock exchanges can be sent to you. So you need to share a verified email address and a phone number of yours so as to have information about these different updates. Next one is you need to keep a copy of the application form with you so as to reconfirm any kind of personal records that you have already presented with the different formats from where you want to open your account. Now, after understanding what prerequisite you must have for the purpose of investing into the stock market, trading days and settlement needs to be discussed into the stock market. So trading days into the stock market is from Monday to Friday. You can operate from Monday to Friday. Market normally remain closed on Saturdays and Sunday, and exchange declared holidays also. So the trading cycle may be of T+2 rolling basis, where T stand for trade day and T+2 means the 2 working days after the transaction is completed. That means if you have placed an order on Monday, then the settlement will take place on Wednesday after taking the T+2 time. Now understand the concept of pay in and pay out. If we talk about the pay in and pay out concept for investor, if you buy share, you need to ensure that payment is made to your broker's account before pay in day, as well as if you sell the share, you need to ensure that shares are delivered to your broker's demat account before the pay in day. So these are the concept of pay in and pay out day. Now you need to also have a contract or note of the which is a legal document which is issued by the stockbroker that serves as a proof of the trade executed on the stock exchanges. So it contains important details such as name, quantity of securities bought and sold, price at which they were traded, and the total transaction value of your transaction. So these contract notes can be provided in the physical form or electronic form. You need to keep that, and it is important for the investor to keep and preserve these contract notes for the future reference also. SMS and email alerts are also there. These SMS and email alert facility is a free service that is provided to the customer to keep them informed about their trading activities and the trading and demat account information. So these activities must be activated by the investor with the help of your stockbroker and depository participant. You need to provide your mobile number and email ID for activating this facility, and you need to ensure that the contact details must always be up to date to continue receive any kind of information. So these are the various types of essentialities and steps that you need to take for the purpose of investing into the security market. With this, I hope you must be having now an understanding of the first segment, that is the primary as well as secondary market of the financial system, and you are now capable of understanding what are the different essentialities and eligibilities you need to have for investing into the security market. With this, we come to an end of this lecture. Thank you.